Hello, I'm Anna Sell for Beneath the Surface with Scott Gibson. Scott recently sat down with Michael Berry, editor of Morning Notes. They took a close look at Europe and how the situation in Greece, Italy and France may affect the decisions our leaders in North America might take. Enjoy.
Hi, my name is Scott Gibson with Beneath the Surface. I'm here with Michael Berry with the publication Morning Notes. Hi Michael, thanks for being with me.
Good to be here, Scott.
Now, I wanted to talk to you a little bit about what's going on currently in Europe, specifically with what's happening in Greece, how things are played out in Italy, and what we might expect from France.
It's a really interesting scenario that's unfolding. It's, I think, a bit frightening for the leaders in the United States and Canada. And, you know, a lot of the action is there. We're still trying to solve problems in the U.S. We've got the housing problem and other things happening. But really the focus is on Europe, and it's on what Winston Churchill called the soft underbelly. And the soft underbelly includes the Mediterranean countries. So you've got Greece, you've got Italy, you've got Spain, you've got Portugal. And, you know, the European Union has been trying to control the situation in Greece now for maybe 18 months. And they pushed it down the road and they've tried to finance it and it hasn't worked. Mm-hmm. And so you've seen in Greece already the disconnect of the population from the government. You've seen a government fall. You actually saw a blackmail attempt in Greece where they were going to have a referendum, and of course that was nixed by the European Union leaders, primarily France and Germany. So you know, you have this situation unfolding where citizens of the countries are disconnecting from their leadership. They're very unhappy, and in some cases there's some violence. We've seen it on the TV screen. That has spread westward. The contagion, so-called, which is what I think U.S. leaders worry about, has spread to Italy. And we've seen the fall of government in Italy, and a new one, which is being advertised actually as a group of economists now who run Italy. So we'll see how that works. It's just happened. And with that, you've seen the loss of confidence in both these countries. The issue is the bond markets, because the issue is debt. And so if debt has to be refinanced, you worry about the fact that the yields on these sovereign country bonds might go too high and might be non-sustainable. And that's what's happened. In Italy now we see a 7% yield, which, and it bounces around a little bit, but it's essentially not a sustainable yield in terms of refinancing. And so, you know, there are going to be serious problems that I think the problem is getting bigger. The Germans and the French and the rest of the so-called northern, more stable EU cannot solve this problem. More to the point, the contagion is beginning to spread to investors in France. And we're seeing French sovereign debt, and there's a lot of it in France. The French like to borrow, just like the Americans do. Go to a 200 basis point premium over German debt. So, you know, this is becoming bigger, and it's becoming slightly now out of control in Europe.
And what's your take? How's that going to affect not just things in Europe going forward, but North America as well?
Yeah, I think first of all, directly in terms of Europe, you've got the problem of the European Union. And my thinking on that has always been, Scott, that you cannot have a monetary union that isn't also a fiscal union. And we've talked about this before. So we're going to see a very different European Union. I'm not sure what it's going to look like. And we're going to see some countries go off of the euro. That's, I think, is going to happen, probably should happen. So I think you could see Greece, you know, devalue, and which would be the thing to do. And in my opinion, it's possible, and maybe even likely, that the monetary union itself will break up, and there may be 2 or 3 or a number of different groups in Europe. So that's a direct impact on what's going on in Europe. That, of course, since it's a big trading bloc, it's actually slightly bigger, the trading bloc in Europe, than the United States and Canada. So that would have direct impact on the banking system in the U.S. because there's an awful lot of trade going on between, and there's a lot of exposure in U.S. banks to European sovereign debt, more than people want to let on. So we'll have an impact on American banks as well, and Canadian banks will fare better, but they'll be impacted some.
How significant of an impact will that have, not just on the banks, but also on the stock markets around the world?
Yeah. anytime you have a loss of confidence in capital markets, and we're seeing a loss of confidence being reflected in European debt markets, then you have volatility in equity markets, and big-time volatility. And you're certainly seeing that now in the US stock market as an example, and also the Canadian stock market. You're seeing days where the Dow is up 300, and then it's down 200, and then it's up 200, and then it's down 300. Tremendous volatility, it's going nowhere. And a lot of traders can make money on that, but a lot of investors cannot. And and you're seeing stocks that you and I might look to a little bit, like the junior mining stocks that we love so much, are virtually ignored right now. And they're, as we've discussed, they're trading for cash in some situations. So any perturbation to the quality of life that affects bond markets, and that's what's happening here, will definitely affect capital markets in the developed world.
Where do you see the opportunity in that scenario that you're painting? Do you see the opportunity coming back into the junior resource stocks, or is it just wise to be on the sidelines until we go through this period? Well,
I think it's wise to have a cash cushion and a gold cushion. I know, we talk about gold bugs. This is not a bubble that we're in now. There's a reason why gold is trading where it is, and gold itself is volatile now. So I think it's worthwhile until we get some visibility on how this is going to work in Europe, and also, I might add, the housing situation in the U.S., which is a whole different topic. I think it's wise to have some cash and to have some precious metals exposure, probably some either coins or bullion in hand, and I think that's a 10% kind of thing. If you have cash, you're going to be able to buy some of these stocks. Are going to be very cheap. They are very cheap now, and the only question is, when do they start to kick up?
And now you've done a lot of work as well in Washington, and sort of with dealing with precious metals, rare earth metals, and sort of security issues in terms of the U.S. Trying to lock down supply of the various different metals. Can you tell us a little bit about that?
Yeah, it's most interesting to see, after so many years of benign neglect, that the senators and congressmen, in a very bipartisan way, it's probably the only thing that's bipartisan now in Washington. Everything else is polarized. I was there at the beginning of this month, and we did a seminar there. We had Senator Murkowski speak, and we had two of the Colorado congressmen speak on rare earth elements. Washington is beginning to realize that we do not have a stockpile, that we import 100% of 18 different metals, that it's almost impossible to get a mine up and operating in the U.S., even if it's 10 years down the road. So there's some legislation coming now, and we're doing a lot of educating in Washington to the extent of, we've got to have a natural resource extraction policy that makes sense for both the environmentalists, and we've got the DOD, the Department of Defense, pushing hard now, and they're going to get what they want. And what they want is a stockpile of critical metals, which includes rare earths and other metals as well.
What effect's that going to have on some of these rare earth element stocks? The juniors are the ones that are a little bit more advanced as well.
Yeah, I think obviously, if you're going to have a stockpile, then you're going to be there's going to be demand. So if you're stockpiling cobalt, which is an important one, indium is an important one. These are not rare earth elements, but they're critical. They're considered critical metals. You're going to have to be developing more mines. So it's going to have, across the supply chain, it's going to have a dramatic effect on companies that probably couldn't mine elsewhere. In the U.S., we have no manganese mines, no vanadium mines, no cobalt mines, and I could go down the list. So there will be a dramatic effect, and as we see resource nationalism in the rest of the world, the Americans are beginning to realize we got to get on this.
And when do you expect that to come out? Next year with the legislation?
Well, the bills are drafted. Senator Murkowski's bill is the lead bill. It's a bipartisan effort. There are 18 senators, 9 Republicans, 9 Democrats signed on to it, and it is being debated, but it has to go through the House, and then it will go to the President for signature. And then there are several bills that congressmen have sponsored, and especially the Colorado congressman, because Molycorp is headquartered in Denver, and it's located in California. So I think you'll see action in the 2012 timeframe on the legislation.
Thanks very much, Michael.
Yeah.
Appreciate you being here.
Good to be here, Scott.
Again, that's Michael Berry with Morning Notes. Thanks very much for being with us. My name is Scott Gibson with Beneath the Surface.
Thank you for watching Beneath the Surface with Scott Gibson. Stay tuned for more.